I recently hosted a live workshop with my friend Jeremiah Lancaster, who is the founding partner with me of the sales coaching business called hubermethod.com. We did a live workshop. We had over 400 people live in a Zoom room where we discussed sales, how to close, how to gain trust, our 6-step method. And it was a really great webinar. I hope you enjoy. We're going to play it right here live for you. And if you want to reach out to Jeremiah, go to hubermethod.com. Thanks for listening. Let's rip through a couple more of the awesome tax benefits that are in place for real estate investors. And I think a 1031 exchange is really an awesome thing. If you hold a piece of real estate for more than 1 year, you go to sell that piece of real estate, presumably for a profit, and you're going to have a tax liability. You can claim this as potentially, you're going to go out and identify another replacement property of like kind, meaning these properties this is also called a like kind exchange, a 1031 exchange. You can set aside these profits, put them in an escrow account, and you can go deploy the capital into a new real estate investment. And the basis changes, but there's no taxable event. It's like if Google stock went up from $100 to $200, you sold it all, but then you went and bought Apple stock because it's a very similar company and there was no tax event there. Of course, you get taxed in public equities, but the government allows you to kick the can further down the road by doing a 1031 exchange. Now, Mitchell, what are some of the nuances of a 1031 exchange that people should know?
Yeah, I mean, you have a certain amount of days to identify and a certain amount of days to transact. A lot of people... You
need a good attorney to help you do this.
You need an attorney, a qualified intermediary who handles these exchanges, who holds the money so that you don't get mixed up in it. But, the saying goes, there's no better buyer for a seller to sell to than somebody on a 1031 up leg. Like, time is not on your side when you
120
go do
days,
it.
Is that right, Mitchell?
180. You have
180 days.
Yeah.
Yep.
But it allows you, if I bought the building for $2 million and depreciated thing to practically zero, I can go buy a $3 million building and now I'll have $1 million of basis and carry the whole thing forward and not get recaptured. So
can I start depreciating that new building? So even though my actual basis is $1 million, but I just bought a $3 million building.
So now you'll take $1 million of depreciation out of the new deal.
That's the max.
You can take all your new basis, your fresh dollars in. And so
that's awesome.
That works nicely with step up in basis. People say buy, refi, die. I mean, this idea that if you can perpetuate these exchanges long enough, when you die or when the owner of real estate dies, the real estate passes through their estate, meaning the ownership interest passes through their estate. And when it comes out of the other side of their estate, it has a new basis of the fair market value at date of death or 6 months after, whichever's higher. So when you die,
let's run through a scenario. I like talking about, just in case I die, I've been doing some planning around that, so it's not as awkward anymore. Let's say I buy $5 million worth of real estate over time. I get old or I get hit by a bus, and I get hit by a bus and my real estate's worth $10 million.
Yep.
I have $10 million worth of real estate. It's already been fully cost segged and depreciated. I have almost no basis. Let's say my basis is $500,000 because I held it for 20 years. I'm about to hand it to my kids. Now I got Timothy and Everett, who are my kids, and they get this $10 million worth of real estate. And you're telling me that if they were to, right after I die, sell this real estate to go buy, Lamborghinis and Ferraris and just waste all the money.
Yep.
They wouldn't actually have a tax liability because the basis would step up to fair market value.
That's right. And if they, called me and said, hey, my old man just passed away and he left me $10 million of real estate. And what do I do with this? I would say, well, we're going to go place it in service. We're going to cost segregate it and we're going to bonus depreciate the crap out of it. And, assuming
so they could potentially be given $10 million worth of real estate. We run cost seg studies on it and figure out they got $1.5 million to deduct year one. And that $1.5 million can come through as a tax loss on their income and offset a lot of their other passive income, or if they're a real estate professional, their active income.
Last night I sent out the email reminder to come to this webinar, and a guy said, I need to be your example. This thing works. My dad bonus depreciated all of his real estate. He paid no tax. He got all this money back, and then he died, and I got it, and I got to step up in basis. And I was like, oh man, sorry about your dad, but
that's awesome. It definitely will make me dying a lot easier on my heirs to take when they get a lot of tax-free money. It's gonna be a profitable event for them when I kick the bucket.
Big news, guys. I created a free PDF that details my method on how I analyze a self-storage facility and figure out what it's worth. Give me a pen, the back of a napkin, and a couple metrics, and I can figure out about what the property is going to be worth to me. If you want to download this PDF, click in the show notes, the first link, and you can give me your email address, and you get a email right away with 4-page PDF that outlines exactly how I think about underwriting or giving my initial analysis on a self-storage facility. Again, click the link in the show notes and you're going to get that document for free. This episode of the Nick Huber Show is brought to you by RE CostSeg. If you want to maximize your bonus depreciation and minimize your tax liability, make sure to do a cost segregation study on real estate you've recently acquired. RE CostSeg offers the lowest priced, fully engineered studies in the business, and you get a virtual site visit with a quick turnaround. They did 30 plus cost seg studies for me over the past year, including a short-term rental along with my self-storage facilities. And I'm also an investor in the business along with my good friend and CPA, Mitchell Baldridge, who you all know. To learn more about how bonus depreciation works, listen to episode 75 of the Nick Huber Show or visit recostseg.com to go ahead and get a free proposal that outlines the cost of the study and your potential savings. Thanks again, recostseg.com.